All right. Hello, everybody. Welcome back to another episode, the second episode of Chipchat. Shout out to whoever mentioned on Twitter that we should name this Chipchat. It's a podcast about semiconductors and semiconductor companies, about chips, and we're having a chat. So I'm here with the resident expert, Jose, and someone who's trying to become more knowledgeable about semiconductors. And we'll be discussing chips, not Doritos, not Lay's, but the other types of chips. Jose, how you doing, man?
I'm doing pretty good. I mean, pretty exciting week. We had AMD report earnings. We had Supermicro report earnings. And even though they're not necessarily chip companies, Google and Microsoft, right, they did report earnings and showed some information on capital expenditure. So it gets me excited for Nvidia. Even though AMD kind of, I don't know if they missed it, or we'll talk a little bit about that in today's episode.
Yeah, Lisa Su was very interesting today in some of the stuff she talked about. We got a good clip of her we'll show later as well. Before we get into the earnings that we had, tomorrow's Meta, Amazon, and Apple. Which out of the three of those are you the most excited for, if you had to pick one?
If I had to pick one, I would say Meta. Again, being a semiconductor investor, Meta has probably been one of the biggest AI investors. So I just want to see what they mention in capital expenditure. Then obviously would have to be Amazon with their AWS platform. Amazon does have their own internal chips that are doing really well, but they're also a big buyer of AI chips. So I don't follow Apple too much, so that one's probably last on my list.
Did you see a lot of the Vision Pro like influencer stuff that's been going on around social media? Have you been seeing some of those videos?
I watched a few minutes. I forget that big YouTuber Mark. I forget his
MKBHD. Yeah.
Yes, so he had a 30-minute video, and I was watching a little bit of it. Interesting for sure.
Okay, we're gonna have to. I'm gonna have to test how bullish you are on VR later. I'm curious about that. All right, so let's get into everything. I think we'll start off with AMD, and then we'll get into SMCI. AMD did pretty well in terms of just getting their core numbers that they needed to get. They came in line with pretty much all expectations. The problem with what happened to the stock, and that's why we saw a retracement of the stock, was that at the end of the day, their guidance came in really bad. I mean, there is one paragraph here on their fourth quarter results that I'm going to read from right now that basically says you should expect declining or flat growth in pretty much every segment of the business. So they expect revenue to be 5.4 billion in first quarter 2024. This quarter was 6.1. They expect data center segment revenue to be flat, seasonal decline in server sales offset by strong data center GPU ramp. Client, embedded, and gaming segment sales are expected to decline. Semi-custom revenue expected to decline by a significant double-digit percentage, and then gross margin stuck at 52%. Stock is down about 3-4%. It was down a lot more in the morning, but recovered a little bit. Any specific numbers you saw in these earnings that either put you in a weird spot in terms of thinking about AMD's growth, prospects, or it was right in line with what you expect AMD to do over the next couple of years?
So there were some shock factors for me. First, let me talk about the non-shock factors. So AMD has four segments that you mentioned. They had the embedded, the gaming, the client, and then the data center. The embedded market, AMD has kind of mentioned that, hey, look, this is going to be very weak due to an over inventory correction happening in that space. And the first half of 2024 will be very weak for that segment. So that one I wasn't too shocked about. The gaming, they did mention that, hey, look, their chips go on the PlayStation, on the Xbox, and now we're year 3 or year 4 in those consoles already. So whoever wanted to buy those consoles pretty much bought them already. So you tend to see lower sales on those products. So that one, again, didn't really shock me at all. The one that shocked me was the data center CPU. They mentioned some seasonal weakness there. And I was expecting at least the GPU sales to really at least make it more of a growth than be flattish, because the MI300, their new chip, just came out. So I was a little bit shocked that they are going to expect some decline. They are or pretty much flattish, even though they are releasing their new GPUs.
Is data centers, do those tend to be a cyclical business? Not really, right? You need data centers throughout the whole year, right?
Yeah, so that to me, they do mention that in certain times when things start to pick up, in forms there, I guess there might be certain times throughout the year where people might need more clouding. But normally, like you mentioned, it's not a cyclical business like the client business. And the client business, which is their consumer market, that one also shocked me, even though quarter 4 tends to be the holiday season. So you kind of tend to sell a little bit more products to the consumer goods. We are coming from an over inventory correction there. So I was expecting some form of growth thanks to that tailwind of over inventory easing. But I guess I was wrong there. And they did mention we're going to see some decline there. So those were the two numbers that kind of really kind of got me thinking a little bit.
Yeah, I mean, it was really interesting because obviously they met all their expectations, but it was almost like it was almost like the what was the quarter I was thinking about? It was almost like the guidance that came out from I forgot the company that I'm thinking about, but it was a company that said they were not, or Intel. Intel was the company where they had 15 billion, and then they in Q4, then they were doing 12 billion this quarter. And obviously Nvidia, I mean AMD guided about 600-700 million less, which is not crazy, and maybe it's sandbagging a little bit, but they said double-digit sequential declines in a few of the core businesses that you mentioned, and that's what I think got the street upset. Now, granted, it's down about 3-4%. It's doubled since September. So from a stock perspective, do you think anyone who owns AMD can necessarily be upset at the earnings like you could be at Intel, or is it kind of still in line with what happened?
I don't think so. And that's why AMD is my number 2 position. And I'm super excited of AMD in the long term. But like you mentioned, AMD has run up a nice amount in the past just month alone. I think in the past month it's up 25%.
Yeah.
So for you to be up 25% and in the next trailing month, next 12 months sitting at a PE ratio of 45, you had to really prove to me that you deserved it. And I want to say that even though it's my number 2 position, it's not that I'm being bearish. I'm just like, hey, you deserve to show me why you deserve this 45 next 12 months PE ratio. And it didn't really show that to me. They did kind of give us their GPU sales. Previously, they did mention that for 2024, it was going to be $2 billion. This quarter, they mentioned it was going to be 3.5. A
Right.
lot of people are saying that's sandbagging it still. But I think I personally was expecting at least $4 billion. That's what we've been hearing from a few analysts here and there. And 4 billion, in my opinion, still kind of sandbagging it to some extent. So this might have some investors worry, hey, is there some supply chain issue? Or is Lisa being a little bit too conservative right now? And every quarter from here on out, we're going to hear that number get bigger and bigger and bigger and bigger.
So AMD's PE 67, Nvidia 50. So Nvidia is still cheaper on a price to earnings basis. Here's my question to you: do you think the guidance that Nvidia gave, AMD gave, is a sign of anything to do with Nvidia, or that's secluded to AMD's problems?
I would say it wouldn't worry me about Nvidia because the GPU market is supply constrained. And to me, it probably tells me if Lisa's not sandbagging these numbers, if she's actually being honest with these numbers, it's telling me that AMD can't really take that supply capacity away from Nvidia. Nvidia must have this really strong partnership with TSMC, and that to some extent makes me a little bit stronger on Nvidia because they've probably been working on the supply chain issues for numerous years. And I don't know if we'll jump into it next, but Supermicro did give us some amazing kind of clarity of what the AI market is looking like right now.
Okay, so let's talk about Supermicro. So this is very interesting. This is a stock that one of my friends, Chris, pointed out at $70 in February 2023. I think it was 40 in 2022. And I didn't really take it seriously, even though they're growing at like 70% year over year, PE of like 4 at the time. So probably should have taken it more seriously. But the stock is up at around $530. It was at 318 on January 2nd. It hit a high of 555 today. 3.6 billion in revenue, 103% year over year growth, 73% quarter over quarter growth. And they're guiding for $14 billion of revenue this year, about 17-18% gross margins, because they're a hardware company. It's not really software. And the market cap is only 28 billion. So, I mean, even if they get to their revenue guide, they're still going to have half their revenue, their market cap be half their revenue as well. PE of 28 right now, which for a company growing at 103%. I mean, you got Apple barely growing and they're at a PE of 29. So, I mean, this was just an incredible earnings from them. They went up 79% this month. They were up 30% last week, 40% yesterday after hours. My question to you, first of all, what the hell is SMCI? Can you give us like a bird's eye overview of what is this company and is this growth actually sustainable for this one?
Yeah. So Supermicro, what they do is they get these chips from Nvidia and AMD and kind of create these servers that end up going to these data centers. So they're pretty much the builders of these servers. What's so important or a niche about Supermicro is most of their customers. You would think, hey, look, a hardware company, most of their money is going to Asia region. But no, I believe 75% of their total revenue is coming from the United States. So they're really focusing on the huge cloud server providers here in the States. They have a lot of manufacturing capacity in Silicon Valley. And they do mention that their turnaround rate of building a server, an AI server to some extent, is a lot faster than some of their competitors. And that's why they're able to kind of move into the market and grab market share. And another important thing is they mentioned that about 50 or over 50% of their workforce are actually engineers that help them really well with kind of the transformations of the AI servers. And that's another reason why they're moving pretty good. And right now for them, the biggest issue is they have two main issues. First is supply constraint from GPUs, so they don't have enough GPUs to make the servers and ship them out. The second issue is they are trying to increase their capacity. I believe I forget what the actual number is. I think it's maybe 20. I'm either 20,000 a month or 20,000 a year, but I would guess 20,000 a month racks a month, and that's still too low. They're trying to increase that dramatically throughout investments. So it's a company taking market share here on building AI servers, but
Are you
there are some.
are you invested in SMCI? Are they part of your port, or how do you think of them?
This one is not. And obviously been wrong with it, but luckily I was right with Nvidia, so it's kind of following through. The reason I'm not in this company is even though they are really strong with their hardware, they're really focused on liquid cooling and they have this engineering teams. In their earnings call, they mentioned that at the end of the day, this is a very price competitive market. And for them to take market share, they have to be price competitive. So at the end of the day, they're offering things at lower price. It is decreasing their margins. And they say that's something they're willing to do to grab market share. You mentioned their margins are already in the teens. So for me, a company like that, where your biggest strength to some extent is pricing cheaper, it's not something that would excite me so much. Luckily for them, they're such a small company that even grabbing a little bit of market share here and there can obviously help their revenue grow dramatically.
Now, why don't you think that? Why don't you think, or why do you think the street it's the most shorted stock on the street? Or not the most, but it has such a short. Like, why are people not believing in it like an Nvidia and an AMD?
I think it's just pretty much why I mentioned this is a company that really doesn't have too much of a moat. Their biggest moat at the moment is they have a nice amount of engineers and they're focusing on things like liquid cooling on servers. But at the end of the day, companies like Dell, HPE, they go out there and they also build servers. So it's not like they're creating something unique to some extent. They do have a fast turnaround time, but hey, if Dell and HPE go out there and hire a lot of engineers, if they focus in a lot of training, they can kind of reduce that gap that maybe Supermicro has right now. So I believe the ability for their competitors to close the gap between them is a lot easier than maybe some companies like Nvidia that you need multiple years and multi-billions of dollars to get it. So I do believe that's what investors are worried about. But we've seen right now with Supermicro, it's proving them wrong because it's been such a small company and they're growing revenues at such a fast rate.
Yeah, I think I agree with that as well, dude. I think that the reason the street is shorting it and they don't believe in the story and they've been shorting it since like $250 is because at the end of the day, it's hardware, gross margins that are rooted in hardware, and it seems more replicatable than an AMD and an Nvidia, even given the nature of where they sit in the supply chain when it comes to the semiconductor plays. But the growth is undeniable, and I think there's enough people that are still willing to buy the stock. I mean, people are buying it at $530 a day right now after hours. This stock is at 529. It's just absolutely incredible. And it doesn't look like the growth is slowing down. Now, here's a question for you. Chris was talking about this yesterday. I want to get your thoughts on this. Given the run-ups we've seen, and then we'll go to Microsoft, do you think we're in a little bit of an AI bubble when it comes to valuations right now?
I think based on the capital expenditures that we've heard from these other players, in certain companies, no. I think in certain place we are. Again, AMD is my number two position, but I don't believe AMD deserves the valuation of next 12 months PE ratio of 45. In the long term, it might do, but Nvidia right now, if numbers stay where we're at, maybe not. At least where the numbers sit right now. The semiconductor is a place that you normally see inventory correction happen. And once that happens, then yeah, we're going to be in some form of bubble. But if we're at right now and the investments are going to continue, then I want to say there's certain companies that yes, certain companies that no.
Yeah, I agree. It's going to be really, really exciting to see how this all plays out. But I mean, these valuations are just like, I don't think anyone thought January 31st, Nvidia would be up 30%, or, you know, an SMCI would be up 80%. Like, that's just absolutely insane. Okay, so let's transition to Microsoft. This is a very important company in the semiconductor landscape because, at least from a software side, they determine what's going on. Their earnings were pretty phenomenal, in my opinion. Azure cloud growth is at 30% year over year, $25 billion in revenue. Insane. 12 billion in profit. So about 50% profit margins on their cloud business. That's the fastest growing business they have. Copilot subscriptions. So Copilot, for those that don't know, is their AI-based assistant on a variety of different products, Microsoft Word, PowerPoint, Excel, all of that has AI enabled like product offerings via Copilot. And it's essentially something that just makes your life easier doing whatever you're doing. GitHub is a company they acquired for $7.5 billion a couple years ago. GitHub is one of the most important platforms in the world if you do any type of coding. And GitHub Copilot is now a $156 million annual recurring revenue business. That, you know, I would say in the next couple of years will be $1 billion annual recurring revenue business inside of Microsoft in and of itself. So obviously Copilot is selling. You got Azure cloud scaling. And the question becomes, from an AI perspective for the semi companies, what do you think we got from Microsoft in terms of AI cloud-based analysis? They mentioned the word AI, the letters AI 93 times. I looked through their transcript yesterday. And what does that mean for the semiconductor companies? Was it bullish or bearish?
I think for Microsoft, it was bullish. They did mention that 6 points of the Azure growth was thanks to AI solutions. They did mention that they're grabbing market share from their competitors. And I do believe that alone it's bullish because it showcases that you can't be left behind with technology. If you're not running the best H100 products or the best AI chips, you're going to end up losing market share. So that alone forces companies like Amazon, forces companies like Google to continue to invest. If not, they're gonna lose market share to Microsoft, which luckily for them, they have that huge golden child of OpenAI. The other thing is they did kind of give us some numbers that capital expenditure for this year, this quarter alone was $11.5 billion. And that actually came on the low end of their numbers. The main reason is because they had third parties contract shift to quarter three. And what that pretty much meant is whoever was supposed to supply them with some servers, unfortunately, did not have GPUs because we are in a GPU supply market. So now they're going to see that in quarter three. So they're still ordering all these AI chips. And another thing, during the Q&A session, there was a question kind of asking Microsoft, hey, is most of this revenue coming from training or for inferencing?
Right.
And from those that are not familiar, inferencing is probably the wheel that keeps on spinning for AI. Every time you go to Chat GPT and you ask it a question, for it to when you ask the question, it reads the question, it determines how to answer it. That's the inferencing part of AI. So it's the one that gets used on a daily basis. And they mentioned, hey, look, most of our revenue in this AI solution is already coming from inferencing itself. So it's showcasing that while most people thought training was going to be the biggest deal for the AI market, is actually inferencing because that's the biggest player right now. And as more people grow into all these AI solutions that they're going to need more computational power, which means more bullish news for AI chip companies like Nvidia.
Is inferencing the part where if I type in, hey, ChatGPT, like find me good hotel recommendations in New York, is that when it's trying to come up with those recommendations and it's searching with Bing, you're saying there's a crap ton of computation that goes to like Microsoft Cloud? Is that how they make the money from the inferencing there?
Yeah, so what they end up doing is obviously they have that partnership with OpenAI. So OpenAI has numerous APIs. So if you are an app developer, you're using that API and you ask, they create some form of app that tells me, hey, what's the best place? I don't have to think of food or lunch for the next week. Just give me something to buy. So that app, every time you ask a question, is gonna send that query to Microsoft Azure, because that's where the computation is being done. So that
Right.
inferencing is happening in the computational side for Microsoft.
Right.
So
Right.
at the end of the day, as more apps continue to use OpenAI's API, we're going to continue to see this growth in inferencing solutions.
Let's hear a little bit on Microsoft. Here is Brent Thill. This guy hates Palantir, but he loves Microsoft. Let's get his thoughts on what he thinks about Microsoft.
Down the results for us today. Jefferies analyst Brent Thill maintains Microsoft as a top pick, 465 with a buy, and raises Alphabet from 170 to 175 and keeps the buy. Brent, it's great to see you. Even though the price action this morning isn't that inspiring, we did have, I think, 15 price target increases on Microsoft. I imagine you were one of them.
Yes, Microsoft is continuing to outperform, Carl. If you think about what's happening with AI, they're so far ahead of their competitors. They're taking market share. You've got price increases across the platform, and the real AI momentum for Microsoft hasn't even started, meaning they haven't really even monetized this yet. And many of these co-pilots that they're launching are still not even generally available. So it's going to take through 2024 to get all these co-pilots out. It'll take us deeper into 2025 before you see the real meaningful revenue. And so what that means is there's just continued goodness in terms of accelerating top line growth. And then the big surprise was the margin upside for Microsoft. Microsoft is now saying that they're going to show 1 to 2 points of operating margin improvement. I think many people believe that is an incredible feat, given all the investments they're putting into AI, that they could actually show margin expansion. So you're getting revenue acceleration as well as margin upside.
Okay, so obviously Microsoft did really well. Margins are good. They're expanding. They're just getting to their AI revenue growth phase. On the contrary, we have Google. Google's cloud was profitable for the second quarter in a row, brought in $9 billion of revenue, accelerated the growth rate after some declining quarters of growth rates. And then you had Google bring in, $86 billion in general, $65 billion from ads, but they fell 7% because they missed on $420 million of advertising revenue. Did you think there was any implication on the semiconductor companies based on the other hyperscaler, GCP, or do you think they're just so far behind in the cloud, AI cloud space that it doesn't have a big impact?
I think Google has a lot to prove right now. I think Gemini will probably do well, but we just have to really see with that. I forget their pro level Gemini, so that's something I'm excited about. I mean, Google also mentioned during their call that hey, for 2023. 2023 was already a big year in capital expenditure for them, and 2024 will be materially larger. And another thing that we're seeing is, for example, I was looking at their capital expenditures for Google in 2023. I think it was roughly $32 billion.
Yep.
In 2020, it was roughly $23 billion. So in a matter of 2 years, or in a matter of 4 years, 3 or 4 years, it was about a 10 billion gap. And some investors might be thinking, "Hey, this 10 billion, that's the only amount of money Nvidia and these AI chips are going to get." And it's not as easy as that. We have to remember that right now, wallet is shifting in spending, where in 2020, companies like Google were using capital expenditures on other things like leasing rental properties for employees.
Right.
Now they're not doing that as much. So while the gap is only up 10 billion from 3-4 years ago, the actual wallet spending being focused in AI infrastructure might be a lot higher than that. So I want to say it's to be careful to just look at that absolute number. It's better to kind of look to kind of understand where some of the spending is going on. So even Alphabet still is a big player here in the AI market, and I do believe it's very bullish for AI investments. But Google does have their own AI chip as well, the Tensor Processing Unit. So they also invest a lot in internal solutions as well.
Yeah, so I want to ask you this question about Google. I mean, their TPUs are incredibly interesting. And this is something I've been thinking about since the earnings call. Google is the only big tech position I have, and they shit the bed. And, it wasn't a fun earnings listening to that call and seeing what they had to say. Do you think that Google would be ahead of Microsoft if 4 years ago they actually released an LLM, a ChatGPT, because they've been working on the tech for a while, and they could have the vision, the foresight to see that, oh, if LLMs become real, every startup company enterprise in the world eventually is going to use LLM as a new form of a computational model, and that's going to require a TPU type of processor, and that's a shit ton of money. That's at like 80% margins for us. But instead, Microsoft realized that pretty quick, and that's when they got 50% of OpenAI. Do you think Google would have been ahead of Microsoft if they had actually just taken the step to innovate around 2020, 2021?
I think so. And I mean, right, they have DeepMind, which was doing really well for them. But if they really would have focused, I'm pretty sure they're going back. They wish they can go back in time, and they're working on a time machine right now so they can go back to 2018 and just start focusing on DeepMind itself. But we can see they're not that far behind from ChatGPT 4. I mean, right now the best large language model out there is ChatGPT 4 Turbo. We still have to see benchmark of their upcoming Gemini. I forget I don't know if it's Gemini Pro or Gemini Extra to some extent, but I wouldn't guess it's that far behind. I think right now what Microsoft has is they were kind of first to market thanks to OpenAI. So that created a nice publicity and a nice advertisement, because when you think of AI right now, the first thing you think about is ChatGPT. I'm going to guess most people, when they end up using BART solutions, they're still going to say GPT or ask ChatGPT to some extent. Like we say Google, let's Google anytime we search anything nowadays. I think to some extent, in the future, whenever we're asking AI solutions something, we're most likely going to say ChatGPT it, or to some extent, somewhere around there. So I think right now, Microsoft has created that self-advertisement with it, and that alone is helping boost. Obviously, being the number one large language model in OpenAI helps a lot, but I do believe just the publicity of being the first player out there is really strong. The other thing is Microsoft. Go ahead.
I was gonna say real quick. Do you think LLMs will actually take away search revenue from Google, and that's another reason the street is kind of scared?
I think that's why Google was scared to maybe invest in it itself, because it was worried that maybe it was gonna destroy its own player, and now it has no choice to do it. I think Google mentioned during their earnings call that they were already integrating some of Gemini's solutions, and it kind of helped saw a boost in certain sales during the holiday seasons. So I'm pretty sure there's going to be some way around it. And if you do get hit with less ads, it means that ads are probably more effective. So you're most likely going to see a higher cost per ad. So there's probably going to be a different way around it, as those ads are going to be more efficient. So in theory, are going to be more expensive because they're going to provide better results for the advertiser. So I think there's going to be some give and take there, but I don't think it's going to completely end the revenue market, the advertisement market.
Yeah, I agree. I think I think search is still going to be relevant. Bing gets 1 billion visits a month. Google gets 88 billion. Bing's not going anywhere. Or sorry, Google's not going anywhere. Bing's not going anywhere either. But Bing's not gonna I think take Google's lunch. But they are slow on cloud, dude, and it is what it is. But I mean, cloud's growing, and we'll see on Thursday. We'll talk about the Amazon in a second. But if Amazon can put up numbers similar to Microsoft in terms of growth of AI cloud, and Google's not there yet, it's going to be hard for the street to justify, continuing to buy Google. Even though, in my opinion, the valuation on Microsoft, 35 PE, Amazon's 57, Google's 24, and it's going to get cheaper as it falls. So to me, I still think it's the best valuation play out there.
I think one thing for Google that they have for themselves is that TPU. I think they're in generation 6 of this chip, generation 5 or generation chip. They're way ahead of their competitors. Microsoft just released an AI chip, and they're in their first generation right now. It's not really in full production to their AI data centers. And Amazon, they have 2 AI chips, but they're only in generation 2. So Google has been creating chips for a few years now. So I do believe what they can provide in the future, if they continue to explore this chip generation, they would have a cheaper clouding solution for AI workloads, because right now AI is pretty expensive, even in the computational form. So if they can really provide a nice performance to price efficiency and really promote that TPU, I do believe they can gain market share there. So I do believe they do have some nice strength with their own chip design that they've been working, I think, since 2015.
Ashwin says, my company banned Bing due to security issues. Wow. Well, that's another thing that's going on with Bing and ChatGPT for the enterprise. And I think Microsoft also realized, dude, ChatGPT is not going to make money on the consumer. They're not going to make money on not a multi-$100 billion business on a $20 per month subscription. Like that's just not happening. Especially when the irony of ChatGPT is the more you use it, the more they have to take from the $20 you paid to pay for the cloud credits to be able to compute your answers. So it's a really weird business model. The money comes from enterprises or defense, which is why ChatGPT recently changed their terms of service. And I don't know if they're going to win the enterprise LLM market. I know Microsoft's going to win the enterprise AI cloud market. I don't know if they care enough about doing the LLMs. That's kind of what the Snowflakes, Pounters, Datadogs are trying to do. But it'll be really interesting to kind of see how that whole thing plays out. Qualcomm, we got that bad boy tomorrow, right?
It was actually today. Qualcomm was today.
Mm-hmm. Okay, I didn't look at it. How was Qualcomm? Was it good? Did
Qualcomm,
it suck?
I actually didn't look at it either. It wasn't one I was too excited about. I do own Qualcomm in my portfolio, but it's one of those that whatever happened this quarter, it wasn't going to make or break any of my other thesis in any the AI market.
It's flat after hours anyway. Mm-hmm. It's flat. So
yeah. And right now, this is a company that's really dependent in mobiles and phones. And right now, we're kind of we're kind of seeing easing on that over inventory correction there. So it's not one that I mentioned. Like I mentioned, it's not one that would. I didn't think they were going to announce anything revolutionary this quarter.
Okay, that's fair. Yeah, and we'll look at their numbers and we'll talk about them next time. But it doesn't seem like anything was too important on that. All right, so go ahead.
I was going to say one thing that's pretty interesting. I didn't send this over on the link side to kind of discuss it, but the CEO of OpenAI is actually going to be in a Foundry event with Intel. And I think this is pretty crazy because there have been reports that the CEO of OpenAI has been looking for billions and billions of dollars to build AI chip factories. And a company that's really focusing on building chip factories right now is Intel. So I'm really excited. This is
let me ask you this question. You're a chip investor. When you see someone coming from a software company trying to build a chips factory, like, do you kind of think like, dude, there's no way that's going to work? Or are you excited that he's trying to build that? And maybe that's how you juice up OpenAI's valuation to make it make sense.
Obviously, OpenAI has been an amazing company. But manufacturing chips is an art and a science. So seeing him looking for billions of dollars to start this AI factory, I don't really bat an eye to it. I think the real thing is there's something else happening. It's not AI chip factories that he wants to do. And for those that might not be familiar, in the semiconductor manufacturing, there's two main phases. There's the front end and the back end of chip manufacturing. The front end is what we kind of see very popular. It's like that wafer where you see a lot of chips in. And TSMC has said for AI chips, making those wafers that have all those AI chips is not where they're supply constrained. They can make as many as those chips as they want. Where they have that supply constraint is on the back end. And the back end is something advanced packaging. It's when you kind of put all these chips together to have the final form. And in that final form, advanced packaging for AI chips is such a niche market that they did not expect the capacity that they needed. So they're building that capacity. So for me, for OpenAI to be building an AI chip factory, it tells me, hey, you must not really know where the bottleneck is, because building AI chip factories is not going to solve the issue. What you need to build is advanced packaging factories. And so that's why when I've been hearing these reports, I believe there's something else that he has his mind in when we're talking about chip design, because this supply constraint in the GPU market is not as easy as if we build more factories, we will have more AI chips. It's not that, because TSMC, they have plenty and plenty on their front end. They're missing on their back end. So I'm really excited.
Would he be building like an SMCI competitor if he actually did this? Or this question right here, Ashman says, can you please explain how an AI chip factory is different from current foundries?
And maybe that's where the difference is, where foundry. So if we kind of go back into how chips are made, the first thing that happens is Nvidia designs a chip, and they use software from Cadence or Synopsys to kind of create a blueprint of the chip. After that blueprint is done, you send that blueprint to TSMC, and TSMC is like, oh, look, I have this blueprint. I'm going to manufacture your chip just like you're manufacturing anything else. In the manufacturing step, there's a lot of different process, just like I mentioned, the front end and the back end. Once you finish the back end, now you have a complete chip. Now Nvidia has the H100, and
Right.
they either sell that chip individually or they send it to Supermicro, and Supermicro builds AI servers out of them. And then those AI servers get shipped out to cloud server providers. So that's like a very top level view of how the chip ecosystem supply chain works. So
And you're saying the bottleneck is not in the literal Doritos, it's in the
mhm.
Dorito bag.
Yeah, to some extent, exactly, the Dorito bag. And that Dorito bag is very unique right now that only certain companies can do it. So I don't think billions of dollars can help out OpenAI's CEO
So why
on
is
this.
Sam Altman doing this? I mean, he's a smart guy. He knows what you know, right? Like,
Yeah, he definitely does. And I believe because OpenAI Sam hasn't really mentioned that he's doing this. It's more the reports that it's AI factory and the people behind it. So that's why I'm excited about this event from Intel, or to hear more of what his actual plan is. And Intel also does have some advanced packaging solutions that could be used for AI chips. So I wonder if there's going to be some partnership between Intel, OpenAI, and with that partnership, it might be inadvertently, it's also a partnership with Microsoft,
right.
because at the end of the day, if you're partnering with OpenAI, you're partnering with Microsoft, and Microsoft just announced their own AI chips. So who knows? This might just be me putting my crazy theory hat on, conspiracy hat on, but I'm excited for February 21st.
Dude, that's interesting. I mean, because Intel has a lot of the hardware infrastructure. You bring in Sam Altman, who's got a lot of the just cool kid on the block type of vibes, put them together. Microsoft's got unlimited money to make this work. I mean, that's a very interesting value proposition. From my understanding, and I could get these numbers wrong, but OpenAI has done about $1 billion in revenue last year. 500 million from API calls, and then 500 million from ChatGPT itself. They're trading at 86 billion. That's 86 times annual recurring revenue. I mean, like that, those are like 2021 numbers. Those are zero interest rate phenomena type of multiples. I would think you need to juice up that multiple to make it make sense. And probably it would be something like maybe getting into the design of the actual hardware. That's really, really interesting. We got one comment here says that in order to produce the best and newest chips for AI and other applications in the world, you need the machines that produce and test them to be the best in the world as well. Yeah, agreed.
Yeah, definitely. There's that's one thing that I'm very excited right now in the semiconductor space is boring companies that are in the equipment phase, that are needed for those type of applications, because you need to make sure your chips are working fine. You need to make sure the packaging works fine. And this is such a new market that there's only a few companies that provide equipment for that. So very exciting for companies like that.
Okay, so let's end it off with Meta and Amazon expectations, because they play a role in the AI space. I'll go first on this on Meta, then you can talk about Meta, and then we'll discuss Amazon. I think Meta is going to say that AI advertising is getting better and better. I think Reels monetization is going to get better and better. Dude, I've been I've been scrolling through a couple of Reels here and there every day, 4 or 5 Reels, and they start recommending the shit I want to see. Like, it's kind of scary sometimes. The shit, like, I'll save a little reel, of a cat hugging a cat. It's like it's a little boyfriend girlfriend type of thing. I'll send it to my girl. I'll be like, oh, this is kind of cute, and just because I press save, the next like 15 fucking reels is the cutest relationship shit I've ever seen. And I'm like, I've got to like change the algo right now. This is getting like, I don't want to see all this stuff. So the algo is really good. And I think monetization from that perspective means it's going to be very good. I think AI is going to be on the back of that. I think Quest and the metaverse, Zucks has got to make it sound interesting again, because it doesn't seem that interesting. But right now, I think they're going to put, 37, 38 billion bucks on ads. They did 34 billion last quarter. And they're probably going to lose in Reality Labs, but AI advertising is going to make up the bulk of their revenue. And they're probably going to say, you know what, that's why we're buying Nvidia GPUs, to keep this AI ad spend going up. Any thoughts on what you think is going to happen with Meta and advertising?
I agree with the advertisement. I mean, we've seen their numbers do well. Their Reels monetization continue to grow. The other thing we are seeing is small advertisement plays that we didn't think, message to direct. It's another thing that Meta has been doing really well with that no one seems to talk about, but that's because it's mainly on WhatsApp, and WhatsApp tends to be more internationally used. But they are seeing strong growth in that platform as well. In forms of data center, I'm very curious to see where they're going because Meta is another one that has purchased a lot of H100s. They've also created a lot of their own AI chips. And more importantly, they're really changing the shift of their data centers. Data centers, they did mention that now they're building data centers focused on AI solutions. And that has to do a lot with things like liquid cooling. So I want to hear a little bit more about their new data center design that they've been talking about for the past few quarters. And they did mention that 2024 was going to be a year where they were going to kind of restart some of the investments in data center, where in the second half of 2023, they kind of slowed down as they were kind of finalizing this new design for their data center solutions.
Yeah, I think it's gonna be exciting. I think Meta's gonna put up some fun numbers. And no, but granted, I could be wrong because I thought Google would be exciting too, and they missed by 0.6%, and the stock tanked 7%. So I think Meta's all-time high.
That was crazy.
That was crazy, right? Like that was like, dude, that was. I gotta play this clip. Hold on, let me play this one clip. This is what I played on the Market Open stream today. This is exactly how I felt when Google reported their earnings. I saw the stock, and this is how Sundar Pichai probably felt when he was talking. And every time he said 3 syllables, the market cap dropped like $10 billion. This is exactly how I felt.
Oh yeah. I ain't gonna lie, I'm getting cooked. I'm getting cooked.
Dude, it was bad. It was bad yesterday.
I mean, it made no sense. YouTube, $9 billion on YouTube alone. They mentioned that their YouTube Reels, YouTube Shorts are doing amazing. I mean, subscription revenue was $15 billion on an annual basis, and subscription for their Google One, their YouTube Premium, and a lot of other stuff that they are just getting extra money from. I mean, I'm excited for Google in the long term, and I do believe this was some crazy nonsense that Wall
Street. Do you own any Google?
Yeah, I tend to own a lot of the cloud server providers when I invest. So I in forms of cloud server provider, my two biggest ones are Microsoft and Google, the only ones that I own. And the third one is Oracle. Amazon is the only one I don't own in forms of cloud server providers.
Okay, Amazon. Expectations for them. I'm assuming AWS. I mean, their AI advertising is going to do well, 40 billion TTM, and then AWS is going to grow. Any core thoughts on how they're going to affect the semiconductor space?
I'm just waiting for their capex. Again, that's all I'm looking for as a semiconductor investor. What's their capital expenditure? It's pretty interesting for those that are not familiar. Nvidia had a cloud solution that was kind of competitive to the clouding market, and every cloud server provider accepted this offer from Nvidia. The only one that didn't accept this offer was Amazon. I guess Amazon was playing hardball until a few months ago. Amazon finally took their offer. But I'm pretty curious.
Wait, which offer? Which offer are you talking about?
So NVIDIA has this solution called DGX Cloud. So what ends up doing is NVIDIA rents out a few of the data center, the infrastructure from Amazon, from Microsoft, or from all these cloud server providers. They kind of rent out the infrastructure, and then they kind of sell that clouding infrastructure to other players. So to some extent, they're first selling the hardware, which I think is insane. They're selling the hardware, the infrastructure, to these cloud server providers. After selling the hardware to these cloud server providers, they go to them and they're like, hey, look, let me rent out a bit of those pieces, and then let me kind of compete with you in this market to some extent. Obviously, I do believe if they accept it, they probably get higher place on ordering. And all these cloud server providers, except Amazon, took them up on it. And Amazon, I believe, just this past in December said they accepted it, and they were going to be offering that solution as well. So I'm really curious to see how AWS does in growth potential, and also how they're doing capital expenditure. I do believe they're going to be investing a little bit more in AI this year to kind of combat Microsoft at the moment.
Yeah, I agree. I think it's going to be really exciting. I also think they're going to have to show a vision for AI cloud going into 2024, because Microsoft on the earnings call, Satya Nadella sounded like he was excited for 2024 and what it was going to be, and that they had a vision. AWS is going to have to show they have an actual vision for how they want to attack 2024. Andy Jassy is going to have to really lay out a game plan. And retail e-commerce margins, I mean, I looked at their numbers today. They did $143 billion last quarter in revenue, top line. $9 billion in net income. So there's a 15 ratio between revenue and net income, which is just like wild. Google has a 4 ratio because they did 20 billion in net income, 80 billion in revenue. So in the context of Amazon, I think they're going to have to show either retail margins are going up at least 1 or 2% on the actual e-commerce business, which is going to be hard to do, but they're working for that. Advertising is great, but that's just really starting to ramp up. So then you've got AWS left. That is the investment thesis for this company. It's at a PE of 57. I think they've really got to show, and AWS cloud growth has not been as good as Microsoft cloud growth because obviously AWS is the incumbent. It's a hard base to grow off of. They did like 68 billion in revenue last quarter just off AWS. But if if Amazon's an AI play, it can't just be in ads. It can't just be in Prime. It's got to be in the cloud. And so I'm looking for that guidance. And if we don't get that guidance, dude, Amazon shareholders are going to be upset because it's going to tank just like Google if that's not real.
Yeah, Amazon has been, in my opinion, hasn't been making too much noise in the AI play like at Microsoft and Google, even though they do have a lot of AI solutions with their Bedrock. I know they made a huge investment in the AI company at Anthropic, which is a nice competitor to ChatGPT. But I just feel like Amazon doesn't really do that well at promoting its AI solutions. And I think that's something that they can do a little bit better and be able to kind of let Wall Street know that, hey, look, we are actually in this AI space to win.
Yeah, I agree 100%. All right, it's going to be exciting. We'll cover it next week on episode 3 of Chipchat. That's the name of this podcast now. Hope you guys enjoyed. Make sure to follow Jose's Twitter and YouTube in my chat. If you're following me, I think you'll definitely enjoy following him. If you care about semiconductors, which is why you're here, he is, in my opinion, probably one of the best semiconductor channels on YouTube. I mean, you did a video on AMD. It has like 12,000 views in like 5 hours. It's ridiculous. So people really respect him on YouTube for his semiconductor thoughts. Make sure to follow him on YouTube and Twitter. And we'll see you next week on Wednesday, 6 to 7 p.m. Eastern Standard Time on the next episode of Chip Chat. We'll go from there. Thank you, everybody. Appreciate it. Have a great night. See you next week. Bye-bye.